A year ago, nearly to the day, my next guest said the stock market hit bottom. It did. His fund has since matched the performance of stocks step by step, up about 70%. Michael Binger is the fund manager at Thrivent in Minneapolis this morning, and good to have you with us, Mike. Now you say what? We've hit bottom. We're up 70%. Where do we go from here?
Well, I would really like to sit here right now and tell you that I think we're going to continue to plow forward and move ahead. But I don't think that's warranted. I think a little caution right now is warranted. I think best case the market's going to chop through the summer at these levels. There's still some issues in the system. Yes, the economy is growing. Yes, corporate profitability is up, but we also have a tough job situation. We got a big deficit brewing in this economy, and we got China overheating, and we also got some European sovereign debt problems. So all in all, I think we're just going to plow through and stay at these levels throughout the rest of the summer.
So, Mike, how do you make money in this market then?
Well, I think you got to, it's a cliche to say, but I think you really got to pick stocks. And I tend to favor large cap stocks right now that have good balance sheets and strong cash flow and good products.
Hey, Mike, let me jump in here. What about all this hand-wringing going on about interest rates, whether it's in China or the U.S.? Should they raise? Shouldn't they raise? Will they not? What do you make all this hand-wringing?
Well, I think it is. It's a lot of hand-wringing, and I think it's over nothing right now. I think domestically, I think interest rates will remain low for the remainder of the year until we see a true economic pickup. And also, I think we got to look at jobs. Jobs growth has not come in this economy yet. And until we see clear signs that that's happening, I think the Fed will leave interest rates low and unchanged for the rest of the year.
Mike, what about the fact, though, that in this market we haven't seen those huge sell-offs that we saw 12 months ago? Doesn't that tell you that this market has a bit of a bias, though, to the upside?
Well, there certainly is a camp that says that, and I've been hearing that a lot in the past few days, especially on the station here. But I think that, you never have a sell-off until it actually hits. So, I mean, we had a bit of a sell-off earlier. We've bounced right back, and I think caution is warranted. I think there's a very, very good chance that we could pull back a couple hundred points in the S&P.
Mike, let's talk about financials. You're cautious on the group. You see the quality name in that group being J.P. Morgan. That's a stock that's had a huge run already. This morning, we're hearing reports that Vikram Pandit's getting ready to share some very encouraging profit expectations with the street. That's a stock that the average investor says, hey, that's $4. There's some big money moving into Citigroup. Why J.P. Morgan and not Citigroup?
Well, I just think the balance sheet is in much better shape, and the credit book is in much better shape at J.P. Morgan. And I think there's one thing that a lot of people don't factor into. J.P. Morgan will participate in the M&A arena much more than Citicorp will, and I think the M&A and the fees that go along with that is going to be a big theme that plays out for the next 12 months.
Hey, Mike, just quickly here, if you're a little bit concerned, do you take some money off the table, sell some stuff, or do you just buy puts? Because the VIX is so low, puts are pretty cheap as insurance. We're a long-only mutual fund, so we don't do a lot of derivative put type of buying. But I don't think that's a bad strategy right here. I would just be careful where you put your money, be a little bit more defensive, favor the large cap companies that have strong cash flows and good balance sheets, and try and reduce your beta on your portfolio as a whole.
Okay, Mike, thanks so much. Mike Binger of Thrivent Financial.